All right. So let's go over the EPs for this week. So the first one on the list is AAOI. Um, so the news on this one was AAOI just finished 2025 with 456 million in annual total revenue. And on the earnings call, management laid out the case that if hyperscale demand and 800G ramps progress as expected, the company could be producing at a pace equivalent to 378 million in monthly revenue by mid 2027. Um, so that's a huge revenue estimate. It had 456 million total in 2025, and it's projecting 378 million in just monthly revenue by mid 2027. So that's a huge growth potential. This is an AI company. Has to do with like the data center build out, I think, uh, something along that. Um, had a nice chart. It had a really good gap up, gapped 22% above prior price action. Was basically going sideways for a long time, maybe slightly uptrending, and then has no overhead resistance. So it gapped up, and just in 2 days, it was up 67%. Um, so that was a good one. Right now, it's kind of consolidating. Maybe when the 10-day catches up, that's something I might look to re-enter. Next one's Alto. This one had a really good chart. Was basically sideways for 3 months or so, gapped up above prior price action, no overhead resistance, really good volume. Um, the news is it was just earnings. It had 179% EPS year over year with an 850% beat. The revenue was nothing special, but the EPS, the profitability was really good, and it was a big surprise. So that one's a good one. BATL. So this one's more of like a thematic play. Um, Italian oil stock surges 80% as Iran strikes lift oil prices. Um, so this one has to do with oil. This is more news based. So this one's really choppy, but it did gap uh, over the weekend, and this maybe is more of a day trade, but I mean the second day gap it was up 177%, and then it's just kind of been chopping around. It would have to kind of consolidate a little bit and get tighter. Right now it's pretty loose, but um, this was interesting one. IoT is the next one. This one had earnings. I didn't think the earnings were that great, but this was today's EP, and I also didn't think the chart was that great. Chart's kind of trending down, kind of gapping, has a lot of overhead resistance. This one probably fail. Um, the EPS is actually decelerating, and the surprise wasn't great either. And the revenue's decelerating slightly, but it was up. It was up today from open, you know, over 10%. So I didn't thought I'd include that one to maybe keep on your watch list. PDYN was an EP yesterday. This one also had pretty good earnings. Smaller company, as you can see, the revenue in millions is, only like 1 million. So kind of I don't know, anyway, it's not a big company, obviously. So the year over year EPS was 92%, and then the year over year revenue was 112%. Um, this one I wasn't super confident in because it had every single time it gapped, it kind of gapped and crapped. And that's what happened again today. Gapped on the first day, had a nice run. Second day, gapped in the middle of the range, and then probably stopped most people out. Last one, SWBI. This one had a nice chart. It was a slight uptrend, nothing too crazy. Volume was pretty good. It was an earnings play. It had EPS of 300% year over year. Revenue was ticking up slightly. Nothing special on the revenue, but it did gap above any other prior price action or recent price action, and there's no real overhead resistance. And from open, it's up, 7%. Not a huge mover, but um, not bad. The volume was pretty low on this one, only 3.4 million. All right, that's the review of the